Welcome. You're watching Countdown right here on Bloomberg Quint Live, and I'm Devina Khanna. The top headlines at this hour with the Nifty 50 perched about 0.2% higher. August series begins on a somber note. The Nifty trades around the 11,215 mark. The Nifty IT index is the top sectoral laggard. Bajaj Auto is trading with strong gains after the two-wheeler maker reported numbers that were in line with the analyst expectations. Vedanta is the top loser on the Nifty after Kane India moved out of its investments made in Anglo-American ahead of schedule, claims to have made gains of $100 million in just 8 months. And Maruti is likely to report, Maruti's actually already reported numbers, and they've come in bang on in line with street expectations. But quickly, taking a look at what the markets are doing right now, Neeraj, 0.2% higher on the Nifty 50. The week is coming to an end, but the new series seems to have started okay.
Yeah, the week is not coming to an end on a weak note. Pardon that language verbosity, but the markets are doing okay for themselves, so about 0.2% higher. The banks are the ones which are leading the charge higher, and frankly, some of the NBFCs too. If you look at the Bajaj twins, they are really setting the stage on fire in the session today. Before we get to that, just a quick word on the volumes in the session today. It's the first day of the new series and should come up on your screen. Should be thin, the FNO volumes. Well, the cash market volumes are okay actually. Even the FNO volumes too at 5 lakh crores, it's not really bad. We'll probably end at about 7 lakh crores, 7.5 lakh crores, which is okay. But the cash market volumes are impressive today on a day when the markets have moved up. So keep that at the back of your mind. We're interested to see what's the kind of buying that we've seen in the Bajaj twins, to be honest. Bring up the Nifty 50 heat map. Devina will speak about what's happening at the broader end of the spectrum. I will highlight what's happening to the Nifty 50. The market breadth at the start was even Stevens. It's almost even Stevens, but more green than red. What's not done well? Vedanta is now down 4.5%. So all the gains made yesterday clearly being sold into. The informed trader had the call, bought it, and now we're seeing this downtick. No change whatsoever despite such a big transaction being unraveled. In fact, yes, there is a change for the downside. Reliance Industries down 1.5%, HDFC about 1.5%. IT's taken on the chin today with the likes of Infosys and TCS, as well as Tech Mahindra are looking wobbly. So that pack is not doing well. What is doing well is this. Yes Bank, and again, a lot of talk about when and how the deal would happen. I would reckon it all hinges on that, but on expectations, this one is up in the session, as is Z, by the way. I think on expectations of possibly a deal getting announced soon. But these two are the stars today. Yesterday got punished. Then the commentary from Rajiv Jain on Bloomberg Quint on the con call today, all of that leading to these two stocks doing very well. And there's a bounce for select names like Eicher Motors, Hero MotoCorp, Bajaj Auto numbers, okay, and nothing too dramatic. Yatin mentioned that it was in line with estimates. And Maruti Suzuki numbers as well, 1.5%. So autos are having a really good day. Frankly, it's all about this bounce back, boys, Devina. Autos, auto financiers, those seem to be the stocks that are really shining through today.
All right, first your joke was really sad, and I think only you laughed at it. But aside from that,
thanks.
But aside from that, yeah, you're right. Auto, for one, meeting street expectations is also a big thing coming after so many months of weakness. So that's clearly witnessed in what some of these auto names are doing. But aside from that, the mid caps and the small caps, if you were to look at it, from a weekly perspective, clear underperformance that we've seen across the broader market space as well. And in today's session, they're actually outdoing what the index is doing, so they're coming back in a big way. IDFC First Bank 8.5% higher, 8.5% plus actually. And the fact that the stock has done this despite disappointing the street on the numbers is incredible. Reliance Capital is up about 7% Graphite India, HEG, both of these counters up about 5%. TVS Motors is up about 4% and Sun TV is up about 3.5%. What's losing, we've got the likes of IGL, which is down about 3.5%. L&T Infotech is down 2.5%. Then you've got Muthoot Finance, Manappuram Finance, Cholamandalam Investments. All of these names are down about 2 to 2.5%. From the small cap index, if you can quickly get that up as well, which is really not doing a whole lot much, as actually, the last few days we've seen a divergence between the mid caps and within the mid caps and small caps as well. Today's session is not proving to be all that fruitful for the small cap index as such, but you do have your individual movers there. IDFC is up about 4%. DCM Shriram is up about 3.7%. Philips Carbon Black, along along with what the HEG and Graphite have been doing. All these three are doing well. Loser, Cyient is down about 3% odd. Jet Airways again languishes. PVR numbers disappointing the stock. Down about 3.5% odd. So that's what you've got in terms of the broader market picture. But the first day of the news series, and from the futures and options space, what is the most interesting takeaway? Agam Vakil joins in with that. Agam, good morning.
We certainly have a lot of traction now that it is a new series. We're looking at a significant increase. As far as your open interest is concerned, it's up to 1.5%. But marginal moves as far as your indices are concerned, even though it's thankfully, as a lot would say, not in the red. And as far as your Nifty Bank futures go, that's what I was talking about, a 12% increase in open interest. Moving on to your India Volatility Index, that has been in focus and it is declining for yet another day. It's down another 3%, back inching towards the mark of 12. But that said, it is going to be the options, scenario that's going to be important when it comes to the August series. And while we are looking at the 11,000 put as the one with the maximum open interest, on the higher end, we don't really have too much of a trend yet. We will have to wait for a few days before we actually start seeing some sort of a build-up in calls, even though the 11,500 call for now is leading with the one with the max OI. Let's talk about the change in open interest then. And as far as today is concerned, a lot of writing around the 11,300, 11,500 calls, despite the fact that indices have advanced today. Moving on, let's also talk about stocks, because we do have a very strong up move in Jsw Bank, and it's holding on to gains of around 9%, 15% added in open interest. Besides Jsw Bank, we also have a lot of traction in Bajaj Finance. So it's more or less recovered all the losses it made yesterday. It's up 7% right now, and another 7% added in open interest towards fresh longs too. But on the losing end, PVR is under a bit of pressure. 15% added in open interest towards shorts, and besides PVR, we're also keeping an eye on IGL, which is also down and out for now. Not out, but certainly down 3%, and 33% added in open interest. So selling coming through there. So it certainly is a mixed day of trade when it comes to some of these big futures and options movers, and we continue to keep an eye on a trading day which is turning out to be a very mixed one for now.
Yeah, for now mixed, but banks doing well, NBFC is doing well. Agam, thanks so much for putting that into perspective. We'll dwell a lot on numbers in just moments from now, but a point of concern, just let's get that out of the way on a day like this in the green. Over 21,000 crores worth of renewable energy debt stands at risk in the Andhra Pradesh government's move to review and bring down the purchase cost of wind and solar energy. Whether that can stress 5.2 gigawatts of renewable projects or no, that's the report that CRISIL has put out, CRISIL Ratings. I had a chance to speak to Manish Kumar Gupta of CRISIL and begin by asking him about the impact that such a move can have.
Let me begin by giving you a perspective. One of the key issues in the renewable sector as it stands today is that of delayed payments by state discoms. And if I look at AP has been one of the key states which has been procuring renewable power, with around 7.5 gigawatt of renewable power projects applying to the state. This is around 10%, or rather more than 10% of the country's renewable capacities. On July 1st, AP government moved to set up a high-level negotiation committee to review and bring down the power purchase costs for the wind and the solar power to the states. As per the directions under the order, projects having tariff more than average power purchase costs and the current prevailing market tariff for these renewable projects can come under renegotiation. So this actually puts all 7.5 gigawatt under the renegotiation scanner, so to say. While committee will come out with its order in 45 days, at CRISIL, we believe that this may aggravate the problem of delayed payments by AP discoms till the issue is resolved. This may spawn liquidity pressures on renewable generators supplying to the state. Typically, these projects keep a liquidity cushion of around 6 months, while the cash flow delays from AP discoms are already looming in excess of the same. So what we estimate with this is that the persistent delays may actually impact close to 5.2 gigawatt of renewable capacities. What we have excluded from this is around 2 gigawatt of interstate transmission projects, where the exposure is through the central counterparties like NTPC and Solar Energy Corporation of India. These may have still more wherewithal to pay to the projects, vis-a-vis the ones which are directly exposed to the state discoms. We also believe that projects with strong promoter support may also have some short-term respite. However, around 2.6 gigawatt of capacity can come under immediate risk of default in debt servicing. This is mainly because of dwindling cash flows from the discoms and drying up of the liquidity cover. So this is in short what is the likely impact that we see of this move.
Manish, I heard you mention the verdict could come in 45 days. Now, would that period be still too long for some of these companies which are in the immediate risk of a default? Part one of my question is that. Part two of my question is, would the 45-day verdict that comes in be the be-all and end-all, or could it get prolonged into much longer, whereby not just the 2.5 or 2.6 gigawatts, but more capacities could face issues? Because until the final resolution comes out on this, it would stay as a stalemate, I reckon.
Yeah, so in response to your first question, as I mentioned, that typically these projects keep a liquidity cushion of around 6 months. And the delays from discoms is already looming in excess of that, which means that somewhere close to 8 to 10 months of delays are already happening over there. So which actually mean that even this 45 days can be a longish period, by which time some of the projects may come under severe stress and risk of delaying payments to the banks. In response to your second question, yes, I mean, a prolonged delay or prolonged non-resolution of this issue can also bring to risk some of the projects which might be currently being supported by the large groups, which may not be able to continue throwing good money behind the bad money over a prolonged period. So that can be a risk and an uncertainty, and will be subject to the way these larger groups are going to be looking at such projects over a period of time.
Okay, so 21,000 crores, I believe, is what is at risk, I would reckon, largely funded. I mean, is this largely funded through state-owned banks and certain corporate-facing banks? Have you been able to do that analysis as well?
Yeah, so you're right. What we said is 5.2 gigawatt of capacity, roughly around 4 crores per gigawatt is 4 crores per megawatt is what the debt intensity in these projects is likely to be, which totals it up to 21,000 crores. You're right. Most of these exposures are to public and private banks, and some of it is towards the NBFCs as well.
Okay, it's a simple no-brainer question, but I'm still asking you. The investor money that would be in some of these, because I reckon that there would have been some PE investments into all of these projects, say 1 or 2 maybe, that is under a big risk, and it's also at a big risk in terms of sentiments of what investor money could do in that particular state as well, right? Because if investors believe that without any scant regard to the merit of the project, if there is a blanket rule about the previous government and therefore this is taken, why would anybody be enthused to go out and make a fresh investment into a large project which could be at risk, if not now, then maybe a few years down the line?
Yeah, you're right. Actually, I mean, investor interest. I mean, this is one of the sector which has actually attracted significant investor interest over last few years. And it continues to do so given the very good favorable policies that central government has formulated. Having said this issue of renegotiation of tariff is not something new. In the past also it has come up, and it has not been taken up favorably from the legal standpoint in the past such situations. But here I would say that in the current situation also, while we believe that the developers are going to resort to a legal kind of intervention, but the final view and verdict may reside with the courts. Having said that, from the point of view of the investors who have been putting their money, yes, we believe that a quick resolution here is quite a necessity in order to prevent vitiating of this investor confidence in the sector. This is very, very crucial because in order for the central government to really achieve their goal of having a 175 gigawatt capacity by fiscal 22, this continued positive investor sentiment is quite crucial. And situations like this, uncertainties create uncertainties in the mind of the investors, which may not be a favorable thing from a investor standpoint.
All right, let's begin with earnings then. Maruti Suzuki's profits surpassed estimates in the June quarter, but with the help of other income. Otherwise, the consumption slowdown is visible in the headline numbers. Yatin Mota is joining us with the key highlights of Maruti's numbers. Yatin.
Devina, Maruti earnings were largely in line with the street expectations. Remember, in the first quarter, we saw 18% cut in their overall sales volumes, because of which we are looking at the top line, which is lower in double digits. Of course, if you look at the EBITDA, that has fallen significantly by almost 40% year on year. This is largely to do with the fact that the discount in the marketplace is quite high. And second factor being that because of lower volumes, the negative operating leverage plays out, because of which again the margins had remained under pressure. Of course, Maruti was able to deliver a 10.4% EBITDA margin this quarter, which was in line with the street expectations. However, we are waiting for the management commentary whether or not this 10.4% is a clean number. This is because there were various accounting standard related changes with a lot of companies. So the depreciation and interest costs usually have those adjustments. Of course, it doesn't impact the revenues and the bottom line, but on the EBITDA front, of course, there could be some adjustment. It seems that the impact would be negligible, but we still need management commentary on that front. And of course, at 3 p.m., the management will be addressing the analyst community, in which they will be giving out the outlook for the full year and also what do they see in the marketplace, especially to do with the margins as well as the sales volumes in the domestic market as well as for the export markets.
Okay, tell us more about Bajaj Auto as well, Yatin.
Devina, again, Bajaj Auto was in line with the street expectations. This time, Bajaj did really well in the domestic market versus its peers, which saw a double-digit kind of a volume decline. This time, the volumes for Bajaj Auto overall, exports plus domestic, was up 2%. That is the reason why the top line is more or less flattish in nature. Of course, like other auto companies, the margins were under pressure. The Bajaj Auto EBITDA margins came in at 15.4%. Again, largely in line with the street expectations. However, if you look at the other income, both for Maruti as well as Bajaj Auto was quite high. In fact, Bajaj Auto cash on books as of the quarter end, Q1 end, was 17,000 odd crores, which is almost 20% plus of today's market capitalization. So, these are the companies which are sitting on huge cash piles, and the way interest rates have come down, the other income and the treasury gains were expected to be higher during the quarter, because of which we have seen a fillip to the profit vis-a-vis the decline in EBITDA. That is because of operational weakness overall.
Thanks for that, Yatin. And certainly the auto names are doing rather well in the session today. What is not doing well is Vedanta, because the investors don't seem to be cheering Care India's $100 million gain. The Anil Agarwal Group company said it's taken back the investments made in Anglo American 8 months after making it. It also claims that it may need some on that investment. Nikki Mirchandan is here to take us through the details of the transaction. Nikki, we also asked the Ken management on whether they plan to make any such investment in the near future. What did they have to say?
They said that they had no intention in engaging into such kind of future transaction, which, this has been a moot point, or rather a cause of concern for a lot of investors around where they had gone ahead and made this investment in Anglo American. It's quite surprising, Neeraj, to know that the stock is actually not reacting to this development, 4.5% downtick. But what essentially they guided us and also said over the con call was they had no intention of entering into a similar transaction. They have enough investment opportunities within the group, and with that they're targeting a 25 to 30% kind of return on these opportunities. Do bear in mind the fact that with this investment they had made the superficial return of more than 50% this time around, and with the new business opportunity that they're looking at, given the capital that they have right now, that would become that will reduce down to 25 to 30%. But then a lot of brokerages in fact are cheering this. The overhang is completely, just to give a little rundown before I get on to the brokerage's take on this development. In all, it's the overseas subsidiary along with the promoter entity which has actually unwinded the structured investment in Anglo-American. The claims have been made, or the net gains on this investment is to an extent of around $100 million for the next 8 months. Sorry, for the period that this investment is made is 8 months. So net it implies a 58% kind of returns. Edelweiss typically says that it's a positive development and should allay concerns that investors were having across the future related party transaction that the company otherwise has. And ICICI SEC actually upgraded the rating of this counter from reduced to hold, and says that with this the company can shift back its focus to operational issues.
Well, thanks a lot for that, Nikki. That's Nikki bringing us up to speed with the Vedanta transaction. Sadly, it's not cheered investors, and that's the difference. A company which has got mired in some controversies, very positive news, the stock doesn't recover. And on the other side are companies that didn't deliver arguably the best of quarters, but the commentary was okay, and the street is rewarding them. Bajaj Finance and Finserv are amongst the top gainers on the Nifty today. Finance in its conference call this morning highlighted rapid growth in its gold loan businesses, and of course in an interaction with us yesterday spoke about a 3-year growth trajectory of 25%. Shefali Malik is here to take us through some of the key highlights of that con call. Shefali, what stood out in the call?
Well, I'll take you to what the main highlights of the con call were. They said they have about 30% market share when it comes to smartphone financing with ticket sizes of 10,000 rupees and above. Then they said that they're growing rapidly in the gold loan business. So that was one of the key highlights, that currently they have just about 23 branches for the same. And going forward, they're targeting about 500 to 700 branches in next 5 years or so. So that's a big growth rate that they are planning. Other than that, they said that the repayment mode through digital has been on the rise from about 5% few years back to now about 21 to 23%, and they expect this to reach about 40 to 45% over the next 5 years. About their margins, they are saying that company runs a reasonably high variable cost model which they can scale up and down quickly to limit the impact on the operating margins with changing growth rates. So that's also an interesting aspect to their business models. About the disbursements in the digital product financing, which became the highlight yesterday when they announced their earnings, that they have cut down their disbursements by about 15 to 18%. They said that the actual cut could be just about 6 to 7%. As the business head, the respective business head will look to target long vintage customers with better repayment rates. So Mr. Jain also said this yesterday, that they would be focusing on the existing customers who have a good track record of repayments. So the actual cut could be much lesser. Just as a prudent measure, they have mentioned higher cut in the disbursements. Also, they are saying that they're poised to become dominant housing finance company in the country. About the asset quality, they said that the asset quality in the LAP business remains steady, barring IL&FS exposure. And about the credit card losses, so they are saying that their losses are much lesser than the top 4 credit card issuers in the country. So those were the highlights for Bajaj Finance. Just a few words that I picked up, a few important statements that I picked up from Bajaj Finserv con call. It was with regards to the exposure that they had to Dewan Housing and IL&FS. The management said that they shouldn't have had those investments in the first place, but they had to do that for the lack of choice, and also because of the regulatory guidelines which require a minimum amount of exposure to infrastructure or housing finance companies, etc. And going forward, they would carefully review the investment decision. That was one area which the management was really grilled upon as part of the con call. So at best, they had to say just that, they'll be reviewing their investment decisions much carefully so that there is no big write-off in the future.
All right, Shefali, thanks very much for that. That's Bajaj Finance and Bajaj Finserv. Both of them up about 6.5% plus this afternoon. So going from strength to strength. Just one minor aberration there on the day of the results, but then now back on track after the management commentary. Moving on, South Indian Bank is trading with strong gains after its net profits tripled to 73 crores. This was also aided by a 25% jump in other income. Asset quality too remained largely stable. Shefali Malik, she spoke to VG Matthew, the MD and CEO of the bank, and began by asking him about the factors that led to the 3-time jump in net profits. Listen in.
Overall, the performance of the treasury as well as the performance in the credit area, both were good during this particular quarter. And in fact, it is consistent with what happened in Q4 too. But Q1 last year was a particularly difficult quarter because we had significant amount of depreciation in the treasury book, and that brought down the profit quite a lot. But this quarter is a normal one. There are no such problems. Plus, the overall provisions also are in line with what we have been talking about. That is about 200 crores in a quarter.
Mr. Matthew, can you tell us a bit about the trends that you are seeing in your advances growth and the deposits growth? Particularly, how is the CASA traction shaping up?
Yes. We are focusing on retail, MSME and agri areas, and within the retail, our focus is on the mortgages, which has grown by 41% YOY. And total retail, including all other education loan, auto loan, gold, etc., total retail has grown by 25.5%. Agri has grown by 14.5% and MSME has grown by 14.2%. So these are the focus areas and we are growing quite well there. We have a corporate portfolio of around 32%. That component has grown only by 3%, and this is completely in line with our strategy of de-risking the balance sheet and going in for more granular exposures. And therefore, the 68% part of the corporate book, loan book, that has grown very well in line with our expectations. Going forward also, we expect that we should be able to achieve a growth rate of 15 to 18% for the whole year.
Sir, what about your deposits? Your CASA is up by about 10%. Your term deposits are more than half of your core deposits. Some of the other banks, they are focusing more on term deposits at the moment. And also, if you can talk about the NRI deposits. Since September 18, the currency has appreciated quite a bit. Is that having an impact on the NRI deposits?
Sure. Our current account has grown by 17% this quarter on a YOY basis, and savings bank of course has not grown that well. It is only 9%. Therefore, the CASA growth has been only 10.3%. But overall deposits that has grown at 12.7%, which is in line with our expectations because total advances have grown only by 13.3% in this particular quarter. And therefore, the overall deposit growth at 12.7% is consistent with that. Within that, the NRI portfolio has grown by 11.4%, and the low-cost NRI deposits have grown by more than 12%. So we believe that our deposit growth is also on expected lines. Particularly, the effort in focusing on the retail deposits, that is helping us. And we have been able to reduce our CD exposure from 6,823 crores to 5,179 crores during this quarter. So last quarter it was 6,823. This quarter it is only 5,179 crores. So that is the focus today. And overall, the deposit growth is comfortable. The remittance side, yes, there has been a small slowdown from the NRI portfolio, but overall the NRI portfolio holds very strong. Even today, NRI deposits constitute around 27% of the total deposits of the bank. So that target is very much intact and very strongly growing.
Sir, MSME constitutes about 24% of your overall advances. and 45% of your SME book is in Kerala. So have there been any asset quality issues there, and going forward would you be adopting diversification as a strategy as far as MSME book is concerned?
We are growing consistently in all the geographies. If you look at only the incremental growth, of course the base is a little different, but if you look at the incremental growth in the last 2 years, it has been coming from all the geographies in line with the branch distribution. That is the retail loans, MSME. These two areas are growing consistent with the branch distribution, and there is no specific concentration in Kerala as far as the incremental growth is concerned. But of course the base is different, and about the Kerala MSME portfolio, we do not have any concerns at all. And if you look at the restructured book following the problems with the flood last year, there also, I mean, we are not having a large exposure in terms of restructured book also. So we believe that the Kerala portfolio is quite intact, and we are not expecting any trouble to come out of that.
So just one last question. Your margins have come off slightly to about 2.53 times versus 2.6 on a YY basis. So what's the outlook going ahead, and overall for overall growth as well, if you can help us with guidance for FY20?
Yes, the NIM actually has improved on a sequential basis from 2.46 to 2.53. And going forward, there will be two important changes that we expect. One, of course, we are mentioning and we are giving a guidance that the overall NPA accretion will be about half of what was there during the last year. That is, it will come down to around 1,000 crores during this year. And therefore, because of the reduced slippages, the write-down of interest that comes out of that will be significantly lower this year, coupled with the fact that, we are also looking at better pricing on all the loan products, including MSME and other retail products. We believe that the NIM will improve by 10 to 15 basis points during the year.
That was the management of South Indian Bank. The numbers posted were decent. The stock's up about 5%. But let's talk trade now and, get you some trading ideas from Rahul Randeria, independent market expert who's joining us right now on the show. Rahul, thanks very much for taking out the time. Do you see the Nifty moving up significantly from here? Should we initiate a long position?
Yeah, good afternoon, Devina. If we look at last couple of days, what we have seen that, some sort of exhaustion at the lower levels. We have seen selling pressure at the higher levels on intraday pullbacks, but definitely we have seen that there is a lack of follow-up selling, and that's why we have seen Nifty taking support at the lower levels, near just below its 200-day moving average, and again sustaining above those particular lows which Nifty has made just around 11,200 mark. So definitely in the deep oversold territory, we feel that Nifty could pull back or see a bounce back from the current levels, because the prices have become lighter at current levels. So positionally, or swing traders can buy at current levels, which is 11,282, and on dips to 11,250 with a stop loss below 11,190. On the upside, we feel that this pullback could be extended towards the level of 11,480 on the spot levels in couple of days.
Okay. The Nifty Bank too, big move today.
Yeah, definitely. In the Nifty components, all the heavyweights as well as private sector banks as well as PSU banks are seeing some sort of supportive action at the lower levels. So we could see buying at the lower levels in these particular banks. So which will pull Bank Nifty on the upside from the current levels. Hence, one can buy at current levels in Bank Nifty, which is 29,284, and on corrections to maybe 29,200. Upside positional target we have around 29,700 to 29,800 in short to medium term, and one should place a strict stop loss below 29,800.
Okay, got that. Individual stocks then?
Yeah, definitely we have a buy call in ICICI Bank. One can buy at current levels, and on corrections to 407 with a stop loss below 402. Upside positional target would be 430. Second buy call is in Coal India. Stock has formed a 52-week low today, so one can buy at current levels, and on corrections to maybe 207. Stop loss should be 202, and upside target we are expecting to 230 in short to medium term.
Just wonder if this current move in Maruti and the results that they have displayed would make people believe that what RC Bhargava was talking about in terms of a recovery coming in August. Can that happen? They've beaten estimates. Is the worst behind? That is part one. And part two is the price giving you opportunity to make the most of that or no? I think that's the big question.
Yeah, and though obviously right now it's still come off from the day's highs. It was, I think it had crossed 5,800 from there. It's come off.
The numbers, Divina, much better than what...
There wasn't disappointment. So even with regards to the last 2 or 3 quarters, when everyone's eyes were pinged on the margin number, which quarter on quarter disappointed. Last quarter was a disappointment. The quarter before that was a disappointment for the rest of the pack as well. This time, most of them have actually managed to just hold steady ground.
Yeah, today especially has been a rather good day for autos. Gurmeet Chadda of Complete Circle Consultants with us on the show to talk about that. Gurmeet, good having you. Thanks much for joining in. Well, you rely on a lot of these high frequency indicators, Gurmeet, for a change. I'm asking you to look purely at the numbers. What did you make of Maruti as well as Bajaj Auto numbers? Do these numbers in any way indicate anything? If you ignore the other sounds, just purely by the numbers, is it possibility entering a period wherein you can accumulate the auto names?
Neeraj, Bajaj Auto, yes. Maruti, still wait and watch. If you see Bajaj Auto, if you see against the industry numbers, there is a clear outperformance, both in terms of consolidated revenue, units, and the overall. I think if you see the two-wheeler segment, their volumes are up almost 5%. It's the three-wheeler where they have reported about 1.6 lakh vehicles. Two-wheelers were about 4 plus 4.1, if I'm not wrong. Again, improvement in market share. Also, if you see the sports segment, I think they continue to do well. Almost touching 50% market share this year with new launches. The cash on the balance sheet is good, 14 times forward, reasonable valuation. So I would, we've been discussing two-wheelers. I think one can look at Bajaj Auto on dips, and I think with the GST Council meet tomorrow at 11 a.m. and government sources indicating, so some respite could come through GST cut, and there's a high probability of GST cut in two-wheeler being a common man's vehicle than broadly overall in the passenger car segment. So Bajaj Auto, yes, considering cash levels, considering gain of market share, considering exports being 50%, and so on and so forth. Maruti, I think, still at about 24, 25 times. And if you see, while and a lot depends on outlook and some of the pain is in the price, I might still want to wait out for the announcement of the scrappage policy. But price levels wise, you may not have too much to lose if you accumulate at these levels. Looking at the high quality stock, it is. You'll have to possibly see one quarter where these, if you see the quarterly numbers, you had 4 lakh some volume in terms of units sold. And I remember monthly numbers at the peak, last year were 1,70,000, which was, we were talking about 5 lakh units. So I think there you need a meaningful revival. But if you look at their product portfolio, which is upcoming product portfolio, and the launch of new cars, there is some promise there. So I would just wait out for Maruti for maybe a month or so before really trying to accumulate it at this price.
Okay. Wait out for Maruti, do not go out and buy that. That's what Gurmeet Chadda seems to be suggesting. What else? Gurmeet, the other thing is the uptick that we've seen in the Bajaj Finance and Bajaj Finserv stocks. Now, would you go out after the con call has been done and the commentary that has come in at 3260 with the expensive valuations but the commentary behind it? Does Bajaj Finance give you a chance to invest, or would you wait for better valuations?
So Neeraj, we have been having discussion. I think Bajaj Finance for me has been an SIP stock. Accumulate on a monthly basis. I actually personally do an SIP in that stock. But from a broader, from an investor point of view, I think one can wait out. I think what I liked yesterday about the management commentary was the breakup they gave in terms of the disbursements. While the street was concerned on strict underwriting standards, cut in disbursements to about 15% in SME and the consumer discretionary space. I think if you see the overall breakup, their mortgage business grew 45%, the rural business grew very, very healthy. It was the consumer discretionary which grew 23-24%, even in an environment like this. And while he was talking to you, he spoke about being data dependent. So my view is that the industry will consolidate. There are some early signs maybe of some stress in vehicle finance. It hasn't yet spilled over to mortgage, but the real estate issues needs to be addressed. There are lakhs and lakhs of home buyers which are paying EMIs with no sight of them getting possession. And I think that's a bigger issue which will hit some of the consumer finance companies going forward. But it is a bit of a ticking bomb. So my view would be, at this price, one may not accumulate more, but just stay put with it. They are just about 1.1, 1.2% of the overall credit. The cost of borrowing will continue to come down. I don't see 25, 27% growth being an issue. So the valuation could sustain. It may not be an outperformer from this price, but would be steady from these levels as the business model, changes from asset-led growth to, the liability-backed growth. And they spoke about how they want to change the borrowing mix as well. So I like the prudent approach, but I think it will be steady from these levels. Wait for maybe some more meaningful dips if they were to come.
Okay, got that. That is on the Bajaj twins. I believe, Rahul, Piramal Enterprise is something that you would like to talk about?
Yeah, if you look at the overall chart, the stock has been beaten down significantly from the levels of 2800, and in the last 2 months what we have seen, the stock has almost formed a double bottom around the levels of 1720. Definitely first time it has made a low around below 1700. Again it has witnessed a pullback towards 2100. Again it came back to those levels. So definitely some sort of bottoming out formation is being seen in the Piramal Enterprise. So one can a swing traders or a short to medium term investor can accumulate at current levels, which is 1808, and maybe on corrections to 1750. One should place a stop loss below 1680. Again, in next 4 to 5 months, I feel that stock has potential to test the levels of 2100. So definitely positionally it is looking good. So one can accumulate at current levels.
Okay, got that. Piramal Enterprises is what Rahul likes. Bringing in Pritesh Mehta of Yes Securities. He's joining us on the show as well. Pritesh, good afternoon to you. Let's talk about the Nifty and the Bank Nifty and how you would trade it now.
Good afternoon. Now see, whenever weakness or bearish bias swings too far in one direction, we tend to revert back to mean. That is what I'm expecting to take place in index. See, in matter of 7 or 8 trading sessions, we have seen a sharp correction in the markets, right from 11,700 to today's low. But what I feel that there is a constant support around 11,100, 11,200. Let me elaborate. The first one is that the PRZ of the bat harmonic pattern, which came into play in today's trade, it was placed around somewhere around 11,217, and it breached that and again bounced back immediately. Second one is that there is 3-digit GAN number of 11,100, which coincides with the low which was seen back in the month of May. Now also the same level was earlier made back in the peak of Feb. So I think there is point of polarity, coincidence of presence of the GAN numbers. Everything is telling me that we are close to creating a short-term bottom after this sharp correction. But market will find it difficult to move on the upside. Yes, there could be a immediate rally towards 11,400 or 450. But I think upside appears to be capped. I think we are getting into a new trading range for the markets. 11,100 downside, 11,600 upside. That's the new range we are going to be playing in for next couple of weeks now.
Okay. What about stocks then, Pritesh?
See, one space which can do well, which can provide a pullback, which I'm expecting in the markets right now is, Bank Nifty. And from this space, something like ICICI Bank stands out. If you go through the ratio chart of ICICI Bank against Bank Nifty, it is the verge of breaking out from a 9-month consolidation pattern. It tells us that this stock has the potential to, outperform Bank Nifty, and even from the index, this will do well. So I think ICICI Bank, after the kind of fall which we had from 443 odd levels, it managed to sustain about the peak of the month of Jan. Also the GAN number of 401. So I think it's holding up pretty well. It just requires a positive move above 415. It just needs to sustain about that. And so we are expecting a move towards 450 in medium term. The second recommendation is buy on Indecision Bank. Now again, this stock has a history of making bottoms around 1330 odd levels. Back in October 2001, it made the same bottom. Thereafter, it was repeated in the month of May, June, and July. This month also, it made a low of 1350 and bounce back. I'm expecting, the stock to continue this pullback and make an attempt towards 1550.
Okay, so those are some specific stock ideas as well. Watch out, ICICI Bank. Remember, while there are calls here, there's a call on investment. ICICI Bank, the numbers come out, and Axis Bank numbers also come out on Monday or Tuesday. So both of those stocks would be interesting ones to monitor over the course of the next 3 trading sessions or next 2 trading sessions. Okay, and those stocks are because of the numbers, there could be some volatility. You got to be prepared for doing that. The other small variable today is what's happened in the insurance companies. Now, Bajaj Finserv, largely on account of the Bajaj Finance move, has moved up, but otherwise its own insurance business display wasn't the most promising. Now, counter that with what HDFC did or ICICI Prudential did, HDFC Life or ICICI Prudential Life or SBI Life did, and I think those companies performed extremely well. We'll get a fundamental view on this as well. But the charts of these companies seem stable, if not strong, and that's my question, really, Rahul. Don't give me a view on all the 3. One of the 3, or maybe even a Bajaj Finserv, but leave that out. Between ICICI Pru, HDFC Life, and SBI Life, which one looks the strongest?
As of now, I'm looking at the current setup, Bajaj Finserv, which has been beaten down very sharply from the levels of almost 8,500. Today it has made a bottom or temporary bottom around 66.31, and we have seen an engulfing bullish pattern of last 2 days, 2 days fall. So definitely some sort of dead cat bounce could be seen in the coming days. So any pullback on intraday basis or when the price cools off, maybe around 7,200, one can buy for a target of 7,450, 7,500 with a stop loss below 6,900. So it could be high risk call, but yes, one should buy on dips for a technical pullback.
Anything within the private banking space?
Private banking space, I am liking Federal Bank, where the stock was forming upward rising wedge. It has seen a breakout above 104, but it failed to sustain at higher levels. Again, currently the setup is just near its lower support line, and on the daily charts it has formed a morning star in the deep oversold territory. So we could see a rally in the stock in the coming days. Definitely one can accumulate the stock at current levels, maybe on corrections to 94 with a stop loss below 91. Upside, I feel that stock can test the levels of 102.
Devina, we were talking about how the cement companies, etc., would have done reasonably okay. There are some stocks that are moving in the last few minutes of trade, so should mark them. And Orient Cement fits right at the top of the bill. It's up 4.5, and a large portion of the move happened in the last 25 odd minutes. Look at that move there on Orient Cement. Decent volumes compared to averages, so watch out for this one. It's doing well. GHCL, I think, is doing well, as is Inox Wind. So 2 or 3 names which stand out. There's also some gain for DLF in the last few minutes, but these are the 3 or 4 names that have inched up in the last few minutes of trade. On the index too, I think Coal India seems to be doing okay for itself. So some uptick out there for Coal India. Do watch out for that one. I think the moot point though is what's happening to financials, because that is the one that is holding out the index. We can argue about all these mid caps, small caps, etc. doing well, but it's the large cap names on the index and the banking names that are really making the difference in the session today. Just one question before we hear out some other voices too, and that one is on the gainer that we haven't quite spoken about today, Z Entertainment. 3.5% higher, 403, must be trading very close to some multi-month highs, 17% uptick in Z over the last 1 month definitely smacks of some optimism around the deal, and the management was, of course, giving them the details as well about what will happen. One binding offer already in place. You would argue that this time around, the gains probably seem to be real, Devina, because of the confidence that the management expressed. I remember him telling Yatin that wait for a few days and you'll get clarity.
Yeah, and the question or the concern was never about the operational performance.
Yes.
Which it has always maintained, and this time also had a very good operational performance. So if this was an overhang, and if that overhang comes off, then the upside keeps it open for Z, even in terms of whether or not you've managed to capitalize on this rally from 320 to 400 or no, and some would say whether we've missed the bus on this move. But it all depends on the valuation at which this deal happens. If there is 400, 425, I mean, you're just throwing numbers in the air right now.
Yeah, right now though you're throwing the numbers in the air, that's for sure. Okay, I'm told Gurmeet is back with us, and Gurmeet, before I talk about insurance, maybe a word on Z and maybe even a Dish. Would you be a risk taker here?
I think it's run up a bit, Neeraj, already in expectation of the announcement which is due next week. In fact, I think not only Z, for the broader market sentiment to improve, I think next 10 days are extremely important, because you have a DHFL resolution, you have a Z, hopefully stake sale announcement, you have the Nippon money coming in as far as the ADJ is concerned. You have the Yes Bank capital infusion. So I think, and I think that sentiment can change, assuming all these 3-4 can go through. So Z, I think purely on as Devina was mentioning, I don't think so. As on operating performance, there was a concern, and we used to wonder last year that every quarter on quarter there was something which made the stock always go down. My sense is that since it's above 400, I don't see really much merit in right now getting into it. The murmur in the market is that the deal is at a 15-20% premium to the price which was there last week, which means it could be anywhere in that range of 430 to 450. So too little to play right now. But once the overhang gets removed, I think it's a very good asset. Their subscription revenues have been growing very well. The Z5, the OTT one, is doing very, very well. Subscription revenues have picked up, and this is despite the overall pie now being very different with the new TRI guidelines. You're considering only people who are recharging, and not everyone who was recharging every 3 months, 4 months. So considering that, I think it's a good asset. And once this overhang is done with, probably one can look at it from a long-term accumulation point of view.
Well, one group of investors is definitely breathing a sigh of relief, and that's mutual funds who've been holding on to Z in anticipation and in confidence that the promoters have instilled in them that, hold on, don't sell yet, we'll get the price back.
Yeah, and we'll get your monies back to you. The Birla Group, Kotak, and a few others. HDFC, they've bet their AMC's reputation on the line. So, yeah, very, very interesting. Actually, it would be nice to get this view from Gurmeet. Gurmeet, no, but leave Z out. I want to ask you about whether if you were to go out and put fresh money in an AMC stock versus an insurance company stock, where are you putting the money? Because insurance companies are now turning a bit innovative, I hear.
Yeah, so Neeraj, actually, listed space, you can only look at HDFC for now, till the time this transition to Nippon happens. So I will look at both actually, because if you see there the money they have paid out through commissions, because of the trail model now, it's come down quite a bit, and HDFC has been the biggest beneficiary of the crisis, and especially in the credit funds. The liquid fund size is now 90,000 crores, which probably used to be the overall debt book 8-9 years back. So I think they've been disproportionate beneficiary. Their credit fund in all this crisis at 18,000 crores. The balance advantage fund, which is the erstwhile prudent fund, is 45,000 crores. So I see a secular story here. Just 2 crore unique folios against 30 crore insurance policy holders, maybe 30 crore PAN card holders. I think the industry will double every 3-4 years. I think to me this is a secular story, and one should again start an SIP in HDFC AMC. Life insurance, I think there has been a big change turnaround in last 3-4 months. If you look at HDFC, for example, the VNB came at almost 30% against 24-25% last year, largely led by the non-participating products which we were discussing offline, which is the Sanchay Plus, which actually offered something like 6.5% kind of a tax-free return. And these non-participatory products are high margin. They carry balance sheet risk and the reinvestment risk. But unlike ULIPs, which are low margin, they don't carry market risk. So they're not really dependent on cycles. Also, SBI Life to me looks very, very interesting. If you see the protection, the APE, while HDFC APE grew by almost 70%, SBI grew by about 41%. And their share in the product mix of the non-participatory products and the online protect products is quite low. Also, these two players, if you see, the online sales are really picking up in a very fast way. And we have seen that, the persistency ratio is very high for online buyers, because that's where the mis-selling is less, and you are actually comparing all plans using various marketplaces and platforms. So I'm extremely positive. The only risk you carry here is the fact that insurance companies are taxed at a much lower rate, which is effectively at roughly about 14%. While I don't think so with LIC being there, this could change, but this is one risk which could alter the tax, post-tax, the PAT proposition for the insurance players. And look at it globally, Neeraj, insurance players are worth hundreds of billions of dollars. I think we've just started. So I think it will be both, considering it's only HDFC in the listed space on asset management.
And the stock is up again, another 4.8% today. In the last 1 month, has been a clear outperformer, 11% higher in the last 1 month, when the index itself has fallen about 4 to 5%. Then you've got the likes of Motilal Oswal, which is not doing badly today. It's at 555. So the stocks come off from the highs, but still doing okay. And HEG, graphite, last time we took a check, I think it was up about 5% HEG is now up about 7.5%. So I think that's the high point of the day for HEG. Graphite India 2, that's up 9%. And Philips Carbon Black, that's the other one in the pack that does well. That's up 15%. So at the high point of the day. But very volatile stocks, really difficult to gauge how these stocks will move. But nonetheless, in today's session at least, volumes have picked up and so have the pricing activity. But talking about stocks then, let's find out what has made it to Sharad Dubey's list of Fab 4 stocks this afternoon. Sharad, good afternoon.
Good afternoon, Devina. The first stock I picked up is Indica Remedies. The stock went up as high as 20% up, and it's the biggest intraday gain in almost 8 months after the company received an EIR for its 2 facilities in Goa by US FDA. Up next, we are having AU Small Finance, which is up almost 4% after it came out with a good set of numbers, with NI rising almost 38% to 395 odd crore rupees, and the net profit rising 2.5 times to 190 odd crore rupees. Next, we are having Jsw Auto in the auto pack, which is up almost 4.4%, and it's the biggest gainer in the Nifty Auto Index, and its volumes are also almost 2 times its 20-day average. And the last stock of the day we have picked up is Suzlon Energy, which is up almost 15% after speculation is there that an outside investor may repay the company's outstanding bond. So basically the company had defaulted, by paying on around $172 million of bonds on July 16. So these stocks have actually made it to the Fab 4 list. Back to you.
Okay, thanks a lot for that, Sharad. So we'll watch out for all of those names. Just very quickly, before we hear out the management of PNB, Gurmeet, a 1-minute answer between PNB and BOB. What's your verdict if you have one preference?
Preferably BOB, Neeraj. I think obviously the merger dilution has been a little more than what Street expected, but I think what I liked is the leadership there. I think also they were very clear in terms of their exposures to DHFL and the ADAG pack. And if you look at NIM, if you look at the net interest income, if you look at the fee part, I think this was a good operating performance. So I think this merger thing, synergy, will take a little time to play out. I think BOB looks better than PNB. PNB, if you see, the gross slippages are still overall book is still about 78,000 crores. The NPA numbers are still 7% plus. So that could be more news driven. Quarters could be very volatile. But BOB for me, given a choice.
Okay, very quickly, Rahul, PNB on the charts.
Yeah, on the charts, the stock has formed an inverted hammer. But looking at the overall setup, I feel that, and the volumes are also supportive. Indicators are turning positive. So from current levels, if anybody wants to play for a dead cat bounce, can buy at current levels. Just stop loss below 65 for a target of 73 in short to medium term.
65 and 73, Devina, it's interesting. So some upsides being seen on PNB as well. Well, the bank has posted a surprise profit in the June quarter. Asset quality worsened marginally, but provisions are at 5-quarter lows. So that's the detail when it comes to PNB. Shefali Malik, of course, had a chat with the Executive Director, Rajesh Kumar, and of course, spoke about a whole host of issues, including earnings and lots more. Let's cut into that.
We had 2-3 important developments. One is that we were able to do a trading profit of over 500 crores, which has helped us because of the yields, government bonds yields going down. Our treasury was able to make a good profit, which was not there earlier. The amount was very limited. And then on top of it, we were able to contain the slippages as well as the recoveries has been good. So these 2-3 factors have contributed to this.
So while the recoveries may have been good this time around, but one of the biggest issues from a shareholder perspective at this point in time is the trust factor with the unraveling of the fraud cases. First, the Nirav Modi case, which happened much earlier, and now the Bhushan Park case, which you reported a few days back. So how do you address that concern to the investors?
Ma'am, let me clarify. As far as the Bhushan, of course, Nirav Modi was a one-off incident that happened last year. As far as Bhushan Power case is concerned, it was an NPA. It was in the first list of RBI. It was an NPA, and more than 50% provision is already there. And the CBI had registered an FIR, and based on that, subsequent to that, the forensic audit took place. And based on that, we have declared the fraud. And there is no, as such, there is no impact as far as the bank is concerned, because already the provision, more than 50% is already provisioned is there.
Okay, so sir, going forward, do you expect the pace of recoveries to continue? And in the quarter as well, your slippages were in excess of 3,000 crore rupees. So could you tell us where is this fresh stress coming in from which sectors? And going forward, what would be the rate of slippages that we can factor in?
Ma'am, to be very honest, there is no specific sector. There are smaller accounts, not such a big account which we can pinpoint. Some accounts are there in different sectors for different reasons they have slipped. But I think efforts are on with the special vertical we have created, that credit monitoring. We are ensuring that the slippages are kept to the minimum. And as far as the recoveries are concerned, you know very well that 2 accounts which I think we have been hoping for a few quarters now. So we hope that with the new amendments, government has come up. So with the coming quarter or maximum in the next quarter, the third quarter, these resolutions will come, and definitely it will add to our bottom line in a big way.
Sir, how has the traction been as far as your CASA accretion is concerned? Because if I look at the data just from March 17, since then it came down to 43.51 in Q4 March 19. So there has been a dip. So what is the trend in Q1 that you had? And going forward, what would be the efforts in this direction?
Ma'am, I think as far as the CASA share is concerned, we have been, I think one of the strongest franchise as far as public sector banks are concerned, and we will continue that effort. And this time also the growth in CASA has been 8.7%. And if you compare with March 17, I think you will remember that before March 17 we had demonetization and a lot of cash came into the savings accounts. So if you see that way, so subsequently that money was utilized by the customers. So it's not fair to compare with March 17. I think March 18 will be a much better barometer to judge this.
So going forward, what are the what are your thoughts on the consolidation process? Because we keep hearing reports of merger of PNB with few other banks. So is there anything like that on cards anytime soon?
Ma'am, to be very frank, I think more than 75% shareholding belongs to the Government of India. And if whatever we have heard till now is basically from the media reports only, and some proposal will come from the government, then the call will be taken by the management. As of now, there is nothing on the table as far as we are concerned.
So, sir, if you have to...
All right, that's of course the management of PNB. Now let's cut across to the Maruti's management conference call.
Ladies and gentlemen, as you are all aware, the auto industry is currently experiencing a down cycle, particularly for passenger vehicle industry. It was the fourth consecutive quarter of decline in volumes. During the quarter, the sale of passenger vehicles for the industry declined by 18.4% over the same period last year. All sub-segments within the passenger vehicle witnessed a decline. The sale for passenger cars, utility vehicles and vans declined by 23.3%, 4.5% and 25.7% respectively over the same period last year. The company was also impacted by the demand weakness and the domestic sales declined by 19.3%. The shift in consumer demand towards petrol segment is now even more evident, with petrol segment now contributing to 66% of passenger vehicle industry's domestic sales during the quarter. For the company, the contribution of petrol increased further from 72% in Q1 financial year 19 to 78% in Q1 financial year 20. The company had also progressively initiated the transition to BS6 norms well ahead of timelines. Now, 5 of our top-selling models, Alto, Baleno, Wagoner, Swift and Desire, are already compliant with BS6 norms. Export shipment at 28,113 units grew by 7% during the year. Turning to the financial performance, in Q1 financial year 20, the company registered net sales of 187,352 million, lower by 14.1% over the same period last year. The operating profit was rupees 187,352 million, lower by 57.1%, and net profit stood at rupees 14,355 million, lower by 27.3% compared to the same period previous year, largely on account of lower sales volume and higher depreciation expenses. However, we remain confident as ever in the fundamental strength of our business, and with the support from all of our stakeholders, we resolve to come out even stronger amid these uncertainties. We can now take your questions, feedback, and any other observation that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking your question. Anyone who would like to ask a question, please press star and 1 at this time. The first question is from the line of Jinesh Gandhi from Motilal Oswal Securities. Please go ahead. Jinesh Gandhi, your line is in the talk mode. Please go ahead with your question.
Hi, am I audible now?
Yes, you are. Thank you.
Yeah. Hi, sir. My question pertains to, firstly, can you share discount numbers for the quarter?
The discount for the quarter were at 16,941.
Okay. And secondly, given there has been substantial decline in wholesales, in that context, how did retail do in this quarter? How are the inventory levels now?
Well, retails also are under pressure because, both these things are interlinked. Our point here is that if we talk about, say, quarter 1, then the retails were down by 5.8. 17%. Retails were down by 17% for the quarter.
Okay, and so inventories are still at about 25 days, or it has come down?
No, inventory still continues to be high.
Would be around 25 days, or has changed materially, higher, lower?
It's 1 month plus, little more than 1 month.
Okay, understood. Thanks, sir. I'll come back in queue.
Thank you. The next question is from the line of Kapil Singh from Nomura Securities. Please go ahead.
Hi, sir. Couple of questions on the financials. Firstly, we see that the other operating income has seen a big increase to roughly 980 crores. So could you help us understand if there are any one-time item or this is a recurring number?
See, one, of course, is on account of the uniform freight recovery as we are moving most of our models on uniform freight recovery. So there is a regrouping issue. So just to give you comparative numbers on this, in Q1 last year, 244 crores was the freight recovery, uniform freight recovery, which was shown as operating income and the expense. This year, the figure is 483 crores. So that's coming in expense as well as operating income. So that's one difference. That's a large amount of difference in terms of operating income. There are other smaller items, but this is a big difference.
So largely, this should be a recurring kind of number.
Yeah, this should be a recurring kind of a thing because this may, you may have 1 or 2 more quarters of reclassification as we move all the models towards uniform freight. So you might see this number change a little bit more in few quarters and then it will settle down.
Because, sir,
that's of course the Maruti Suzuki concall, and amongst other things, they're saying that inventory levels are at 1 month highs. The question mark only is this: are we reaching a bit of a peak before we try to improve on inventory levels, on margins and other factors?
I think initially, when we started the conversation about high inventory levels, that time it was closer to, for most of these manufacturers, it was somewhere close to 45 odd days. And when asked whether it's around 25 days, he pointed that it's slightly above 1 month.
Yeah.
So maybe close to about 40 odd days is still a lot of inventory that we're talking about. And we also spoke about some discounts given during this quarter as well. The stock has come off and is trading at about 5,799.
But two-wheelers, they've been doing exceptionally well. Eicher Motors up 4.75%, Hero MotoCorp 3.5%. So not just Bajaj Auto, the others too are doing so well for themselves. Fundamentally, Gurmeet, would you put money into an Eicher Motors right now? 17,000 odd at the current valuation, still not cheap, but certainly not as expensive as it was when it was at maybe 21,000. That time they seemed slightly stratospheric. Now they seem a lot more reasonable.
Neeraj, again, wait and watch. I think by I agree there has been it's more of a premium coming down on Eicher rather than, I would say, a price correction. So, I think let's wait out for the GST Council meet. Let's also see how things pan out leading up to the festive season. Bajaj Auto looks to me the best bet. I mean, gain in market share, far more diversified, far more reasonably valued. So and a much better product. Ms. Eicher also has commercial vehicles, and they have already indicated warning on how the scenario looks quite dull. With the new axle requirements, overall slowdown. If you see the railway, if you see the overall average truck rentals, which is a great indicator, they have been coming down. So commercial vehicles also looks in pain. So there's two parts, both looking in pain. My sense is to leave it where it is right now.
Okay. One other pocket, and that is cement. We've seen two bigwigs report their numbers. Ultratech is still to report its numbers. But, just want to quickly get a trading angle going from Ultratech. Rahul, would you track this one?
Yeah, Ultratech has failed to see some sort of follow-up selling pressure from last couple of days. Last 2 days, including today, the stock has managed to bounce back from the intraday lows. So definitely there has some sort of supportive action in the cement sector after ACC's result. So definitely for a pullback, one can take a call on the long side. One can buy Ultratech Cement at current levels with a stop loss below 44.10, and upside I feel that stock can test the levels of 46.15 in short to medium term. So definitely at current levels, even and on dips to one can buy.
Okay. Gurmeet, what have you made out of the results from the cement pocket that have just recently come out? We've seen the numbers have been encouraging, to say the least.
So, I'll be positive on cement, Devina, and I genuinely think the cement upcycle has begun. There is consolidation already with Ultratech and ACC Ambuja Group almost controlling more than 2/3 of the market. We've seen how with better pricing, despite volumes being subdued, the results have been good. EBITDA per ton looks good for both Ultratech and ACC. Even Ambuja, despite volumes being down 8%, we saw numbers still come in. The overall numbers were not, and I think this pricing trend to me will continue. Also, I think this construction is a great economy multiplier. There'll be increased focus. Government has already announced the focus it has on housing. There's a 2-year target they have on affordable housing. So I see that picking up, and there will be positive operating leverage. You have barring Shree Cement, which is at probably 85% plus capacity utilization. Others are sub 70, and I don't see a lot of supply coming in. There's a lot of addition coming in this year. I mean, we've saw huge additions in cement capacity in last 7-8 years. So my sense is overall the play looks good, and the valuations are, I won't say cheap, but they're fairly reasonable. So Ultratech and ACC for me. Shree Cement selectively maybe on dips.
Okay. Quick word on Vedanta, Gurmeet.
Avoid. I think I have developed this thesis now. The more the management clarifies on related party transaction, it has a negative correlation with the stock price. While this entire development since morning of making 100 million and the structure unwinding was to allay the fears, in first place shouldn't have been done. And while the assurance that in future there will be no transactions related party, I think gives some assurance, but looks difficult. I think you can get a little tactical with Vedanta post the Fed meet. My sense is that you will see a rate cut by Fed. We've seen ECB talking of more monetary support, both through rate cuts as well as the renewed asset purchase program. We have the other central bankers turning dovish, whether it is Australia or some of the others. My sense is once this entire another round of QE or monetary easing starts, that's a better time to probably get into some of these plays. Fundamentally, I can't make sense of the Vedanta numbers, to be honest.
Okay, it's time to take a look at what dealing rooms are recommending in the session today. Darshan is here with his channel checks. Darshan, good afternoon. What are you listening?
Yeah, so it's in the midst of earnings season, so most of the news that we get will be related to earnings. The big one tomorrow is ICICI Bank that will report numbers. It's moving ahead on the higher side ahead of the numbers. Dealers anticipate strong set of numbers, beat on the top line, and they anticipate that the slippage number also will be well controlled. So ICICI, the anticipation is of a strong number. The other one is Asian Paints. Again, some of the domestic funds are actively accumulating in a market where there is a lack of quality names, and most of them have given a weak outlook. Even Asian Paints does the same, but nevertheless there is accumulation in some of the stocks which have high brand recall and brand value. So Asian Paints is one of them. And the final one is Dr. Reddy's, which has also moved up in trade. Dr. Reddy's will report numbers on Monday. Dealers anticipate strong numbers to come in. Some of the HNIs are actively accumulating the counter. Even the estimates do indicate that there could be a potential surprise on the numbers. So that's something that's been spoken about.
Well, thanks a lot for that, Darshan. So those are 2 or 3 names to watch out for. We also have some announcements that have just come out on JSW Steel. The results are expected any time, but they've made some announcement about some fundraising through NCDs. Ahead of the numbers, Pritesh, might be a risky call, but how do the charts of JSW Steel look like?
I think this stock is going to underperform. Yes, we saw the stock bouncing back from the lows in today's trade, but I think if you look at the overall trajectory, it is going lower. The stock has, for quite a long period of time, it was holding on to levels of 270, 280, but that appears to be broken down, and I feel that this downside momentum is going to continue. In fact, from the entire metal space, this stock looks vulnerable, and we can see sharp decline coming in maybe towards 220. 20.
Okay. I think
JSW numbers.
initial numbers have come. So I'm seeing the net profit number right now, and that's at about 1,028 crores. Expectations were that they would be at about 1150, so it's coming below street expectations. That's the figure that we have as of now. We don't have the revenue numbers. Revenues, remember, were anyways expected to be muted, slightly negative at about 19,837. But those numbers should come up on your screen right now. I think it's 19,810. So that is bang on in line. The expectation was a dip, and that's bang on in line. But I think the profit numbers have disappointed a little bit more. The stock, though, is holding up a steady position, about 0.5% higher. The capital raising that they're talking about, probably keeping it slightly more buoyant right now. 4.8 million shares have been traded on the stock.
Yeah, the margins are expected to be at about 19% from the looks of it. If the revenues have stood out, held out as expected, but the net profit is marginally lower, maybe there is an EBITDA underperformance. But with the metal companies, you never know. There could be below the operating line some changes that would have happened that might have impacted the numbers as well. So we'll wait in for Nikki to analyze these numbers in greater detail and then tell us. But as you can see on your screen, the revenue numbers look okay. Yeah, the stock is just going down a bit. The revenue numbers, though, look okay. It is the bottom line number, which is, as Devina said, marginally below the numbers that we were watching out for. Volumes, anyways, would have remained flat. With most of these companies now, cement, steel, etc., you can typically price in what the volume numbers would have looked like. So that is not a problem. The question mark is, of course, on the pricing and the realizations in this case. And, of course, if the higher raw material cost for JSW would have impacted their EBITDA numbers, waiting for those numbers to come out before we give a verdict on what the stock profits have looked like. But at 1,028 crores of profits, that's quite a bit below the 1,150 number that was anticipated, and the 2,366 number that was the corresponding quarter last time around. So,
and there's another income component also. I think 141 crores is the other income component in the numbers this time as well. Gurmeet, these few numbers that we have right now, a quick optical perspective?
Evaluating it, Devina, but avoid for me. I think one important announcement they've also made is raising about $1 billion through the global route in terms of NCD. So there could be an NCD issuance as well as a global. So you have to watch out for the debt levels as well. That's something which we have to be worried. But I'm also, trying to look at the numbers right now as we speak. So my suggestion would be not to get into it. No, neutral on it.
Okay. We'll try and get in an expert or an analyst who tracks the stock closely to give us further details and as to how to read into these numbers and whether or not it's actually prudent enough to take an investment call on this stock right now. 250 for Jsw Steel at this point. It's slightly volatile, so it's starting to move up once again, up about closer to 0.75%. But just a few minutes away from market closing, let's quickly get you those top calls from Rahul as well as Pritish, both of them here with us. Rahul, let's start off with you first.
Yeah, definitely. I have a buy call in Hero Honda. As you said, that the two-wheelers stock are seeing some sort of strength at the lower levels. Hero Honda has formed a engulfing bullish pattern supported with decent volumes. So I feel that stock can bounce back from the current levels to the levels of 2600. So swing traders can buy at current levels with a stop loss below just 2490, 2390, and one can accumulate in the range of 2460 to 2430. So definitely we can see some sort of pullback from the current levels.
Okay, Pritish.
Yes, my recommendation is on buy L&D slightly from a longer time horizon. Now see, the stock went through a sharp correction from 1600 levels, and then post the numbers came in, it's attempted to create a base. Now several things are taking up in this counter. The first of all is taking support around 200 moving average. Also the same is placed around the 3-digit GAN number of 1390. So I believe that the stock is appearing at the good support zone after a sharp decline. It's telling us that you need to buy this counter. So buy for a target of 1470.
Okay. Well, so that's a buy call on Larsen and Toubro. Yes, Bank is up 9%. the stunning move today on that counter. We haven't spoken about it thus far. Pritish, 95.7. If you are not a risk-averse trader, oh, excuse me, I don't think you can talk on yes. Can I ask Rahul about yes?
Yeah, definitely. We have been bullish today on Yes Bank. We have recommended buy call around 91.70. We have a positional target of 99, and because after a severe sell of stock has seen some sort of arresting tendency at the lower levels, and once it trades above 100, a stock has potential to test a level of 111. So definitely high risk trader and a swing traders can buy at current levels with a stop loss below 89 for a initial target of 9900, and if it's sustained above that, then target could be extended towards the level of 111.
Okay, 111. Gurmeet, risky buy, but maybe some suitors in the fray. Would you take that risk? Yes Bank.
No, Neeraj. Their double B and below portfolios too big for me to take a call. We saw slippages outside the watch list in the last quarter numbers, and I've said that once the market is also polarized not only in terms of the large cap and the mid caps, it's also polarized in terms of corporate governance. Better governed one and not so better governed one. So I would give it another quarter or so. My sense is there will be more slippages. There's no point calculating price to book value. We don't know what is there in the book. And I think the trigger could be, and if somebody wants to be a little, maybe, take a tactical call, would be the fundraise. Both the QIP as well as the infusion by 2P funds. So that's why I said I think the next week would be critical. Once that happens, then there could be material upside, because the CET1 is almost at 8% floor. And they have been struggling with even their CASA book. Their deposits are seeing some early redemptions. The retail book, although I must admit, is doing very well. I've spoken to people who had mortgage, LAP. There's a lot of focus on building the granular book. So I think the transition would take a little time. So better place.
Okay, I get your point. Gurmeet, quick 30-second answer though, if you can. 30 seconds. IDFC First Bank. Poor numbers, but all provisions taken. Is that the reason why the stock has gained after the results?
Yes, Neeraj. I think looks good from a as I said, disclosure, upfront disclosure, right provisioning, and admitting to it would make more sense rather than keeping hiding behind treasury gains and other stuff. So buy for me as far as the IDFC First.
Buy IDFC First at the current levels is what Gurmeet is saying. Great. Gurmeet, good having you. Thanks much for joining in and giving us that perspective. Those two stocks are doing so well. Pritish, to you, IDFC First Bank. To Rahul, a word on Indica Remedies. But Pritish, to you first. IDFC First Bank.
Now see, first of all, if you look at the chart structure, we don't find it exciting at this level. Yes, because if you look at the overall historical performance of the stock, you don't find it, enticing. But so I would probably avoid. I would stick to the larger banks right now.
And Rahul, very quickly, Indica Remedies.
Yeah, Indica, last couple of weeks, what we have seen, the stock has seen the rises are very sharp and the drops are very narrow. So definitely the price volume action seems to be, the stock is been bottoming out. One can accumulate. It is not a short-term trading call, but yes, if anybody wants to invest for maybe a couple of months, can buy or accumulate at current levels and on corrections to 160. Stop loss would be 135. On the upside, I feel the stock can test the levels of 200 in next 3 to 4 months.
Okay, and we're ending at the day's highs for the Bank Nifty as well. Rahul, Pritesh, stay on. We'll take in closing thoughts from you, but here's how we're shutting shop. Shutting shop well, about 1/3% for the Nifty 50. That is not too great, but we're just holding on to that 11,300 or thereabout, the kind of levels. But the banks are participating today. NBFCs are participating today with Piramal, Bajaj Finance, Bajaj Finserv, IDFC First in the green. So it's looking good from a financials perspective. The mid caps and the small caps should come up on your screen, the indices, and let's see how they have done. A flattish but not a bad day, you must say. You have to agree that it's turned out to be a pretty good Friday, really, from a bull's perspective. Let me talk about the large caps. They will, of course, then bring you up to speed with what's happened across the other spectrum. The large cap space, I spoke about financials. Look at that. It's all rate sensitives, the first 5. Yes Bank, Bajaj Finance, Bajaj Finserv, iShares, Hero Motocorp. And then M&M, Bajaj Auto, Tata Motors. 8 out of the 10 names are rate sensitives, with Z and Bharti Infra, the other ones, which are also not doing all that bad. What's not done well is Vedanta, and this is quite a surprise because most people would have anticipated that this would be positive, but buy the rumor, sell the news maybe. IOC is not done too well. HDFC, the gainer for the last few days, has come off today. Reliance has come off today. So those are the heavyweights which are weighing in on the index in the session today. And then a few IT names have not looked all that great. But the broader end of the spectrum, Devina, again, while the small cap index is in the red, the space by and large has done okay.
Yeah, the mid-cap index has done really well. The small-cap index probably is just a subpar day. Starting off with the gainers, and the last one that we spoke about with Rahul was Indoco, and that stock's going to close the day with about 11.5% gains, followed by IDFC First Bank. Post numbers, the stock has just been climbing, and today's session has got an 8.5%, almost a 9% return by the end of trade. Rain Industries, Sterlite Tech, these are the other two stocks that have gained on good volumes in today's session. Rain is going to close at about 96, and then you've got Sterlite Tech, which also closes with gains of about 5.5%. Cement as a pocket, mid-cap cement particularly, is doing well today. So Heidelberg Cement and Orient Cement, these are the two areas that have seen a last-minute surge over the last half an hour of trade. That's the interest that came in. South Indian Bank, good set of numbers. We spoke to the management as well. Profits have tripled, and the stock was up about 5%. HEG, Graphite, Phillips Carbon, all of them, similar moves that you've seen on day. They all move in tandem the day that they move. So you've got all of them getting gains of about 8.5%. I think Phillips Carbon is in double digits, so closer to 15% for Phillips Carbon. And Federal Bank is the other one. We spoke to Rahul about it. It's picked up a little bit from the lows. 95.5 odd is thereabouts where it's closed at, so 3.24% higher. Amongst the losers then, Bajaj Electricals and IIT Tech, Praj Industries are some of the losers in trade. Bajaj Electricals a hefty 8% given up. Soba Developers, Vodafone Idea, that one too takes a big knock to the chin. The stock is, I think, below face value now by the close of it. So I think that's Vodafone Idea for you. 9.3, down 4%. And Cyient and AB Fashion, those are the other two stocks that looked weak in today's session. But all in all, we've come to the end of an extremely volatile week. The series ended on a negative note. Let's see what the week has done.
Yeah, should bring up the weekly performance as well because the markets are now finally shut shop. Let's see what the weekly performance is. Today's session would have looked good for the Nifty Bank, so that will be an interesting index. But more importantly, the rest of the markets would have looked fairly okay, ordinary performance. So Nifty 50 ending in the red for the week, with the losers being UPL, which has actually gained quite a bit in the recent past. HDFC, again, which has held out but correcting a little bit. There's weakness in Adani Ports and Special Economic Zone. Coal India has come off. Tech Mahindra has come off. The only ones which are in news and have come off are, and for reason maybe, Tata Motors, Bajaj Finserv, Jsw Steel, and to an extent HDFC Bank. So these four had some news flow to themselves and have corrected about 4%.
For the mid-cap index, that will come up next. The weekly performance, not very different from what the Nifty 50 has done, but you do have a few movers as well. Amar Raja Batteries on numbers was up about 7%. Sun Pharma Advanced Research continuing its momentum post the upgrade on Sun Pharma. Berger Paints was up about 6%, and IDFC First Bank post numbers. Losers, Canara Bank disappointed the street with its numbers. RBL Bank continued to bleed, and Manappuram Finance, Muthoot Finance, Cholamandalam Investment, all of them lost out in trade.
So all financials, M&M Financial and Group Finance too,
also,
amongst the top losers. M&M Financial losing up whopping 18%. The other interesting one is, of course, Future Consumer, which is down about 15% in trade as well. The volumes for today's session, actually maybe the small cap space very quickly, and then the volumes will come up on your screen. This is what the small caps have done. Hardly any gainers. Radico Khaitan maybe up 5%, Rights maybe large a little bit, but Bajaj Electricals, they've been speaking about it. The fall today and the fall the last few days has been strong. VIP correcting about 12%, OBC about 10%, Just Dial correcting about 10%, and Jet Airways 9% down in the week, so not too great. Kajaria Ceramics too, after the numbers.
Yesterday, I think yesterday was
correcting quite a bit. Yes. The volumes for today, very quickly, just before we get back, final thoughts from our experts. Well, cash volume's not too bad on a day which is ended in the green, a heartening sign.
Actually, even F&O, it's almost average. The first day of the new series, you wouldn't expect it going to buy either. So it's the cash market volume, which is also not a bad number to go by. But quick closing comments. Pritish, want to start off with you. As we step into next week's trade, what would be the one crucial thing you'll be watching out for?
see, I mentioned the start of the show that we have reached a point where you should be looking to build buying opportunities, and I think we have to focus on the outperformers and leaders which can take the market forward from these levels. And I certainly pointed out about Bank Nifty and the select private banks which could do well. I think that's how we should position ourselves going forward. Maybe Nifty might attempt 11,500 in next couple of days. So I think after that it would be a pretty tough task for Nifty to maintain the momentum. But I think a pullback is on the cards.
Okay, Rahul, what about you?
Yeah, in the last 6 days, the prices on the indices have been hammered down significantly. And for the first time, what we have seen that the prices have become lighter. And for the first day, after 5 days, we have seen the index, both the index have closed near the day's high. Clearly indicates there has been a supportive action at the lower levels. And I think it is poised, both the indexes are poised for a short covering rally in the coming days. So definitely I would be a buyer at current levels, even when there is a correction of 50-60 points in Nifty or 150 points correction in Bank Nifty. One can buy. Upside positional target in Nifty is around 11,480 and Bank Nifty upside positional target is 29,800, and one can go long on the corrections for at least a technical pullback.
Okay. We leave it at that, gentlemen. Thanks very much, Pritish as well as Rahul. Appreciate you both taking up the time and joining us this afternoon.
Thank you.
And on that note, it's a goodbye from Neeraj, myself, and the entire team behind the show countdown. Thanks for watching, and Market Wrap comes up next.